Employees ultimately are your lifeblood. As an investor, you own a company, and the company can only go as far as the employees are willing to take it. If the employees are dissatisfied, they're going to treat the customers bad, the customers won't return, and you're going to lose sales. So in companies where the employees are happy, those companies have a tendency to do better on average. And statistics show that if you look at the Glassdoor top 10 or top 20 performing companies, in terms of employee satisfaction, they tend to outperform the market by about 3 percentage points per year. I'm not saying that I don't believe that just buying those companies are viable strategies, but I do think that they are a good place to look for excellent companies. What do I mean? If we go to Glassdoor and we look at the best places to work in 2009, okay, best places to work in 2009, we look at some publicly traded companies here like General Mills, Netflix, Adobe, Google, Intuit, NetApp. A lot of these companies here, if you notice, are 10-baggers. Netflix, for example, Adobe, Google, Intuit. A lot of these are really well performers in terms of had you invested in them, they would have taken your portfolio quite far. And based on my analysis, just buying companies that are ranked in the top 10 places to work that also have high returns on invested capital tends to perform extremely well. So if you look at these companies, the ones that are top 10 basically place to work at, and you also look at what that company returns on its capital, and you look at those two factors there, you tend to do a pretty good job. So if you were to look at something like, Netflix back in 2009, so let's open up Netflix here on YCharts. Let's go to return on invested capital, 5-year median, and let's look at in 2009 what it was doing. You can see it was returning basically very high amounts, 17-18% on its invested capital. We look at the price of Netflix. Basically, had you bought it in 2009 for $10-15 a share, it would have went up all the way to about $700. I mean that is just a phenomenal investment. Adobe is basically the same thing. If we look at Adobe is also considered in 2009 a top 10 place to work. We look at its return on invested capital, 5-year median. Let's look at basically what it was at in about 2009. Again, it's 16, 17, 18%, which is very high. We look at its performance in terms of price. Had we bought it in 2009, again, it's a 10-bagger. More than that if we had been knowledgeable to sell at the top. But regardless, as my point is, we can use another one here. Google is another example. Google, so you look at the companies that are the top 10, and also you look at how they're able to basically allocate capital. Google, again, in 2009, you can see it's allocating capital. Its return on invested capital is about 20%. You look at the performance of it over the past while. Had you purchased Google in 2009, it was a top 10 place to work, and they're able to allocate capital well. It was another 10-bagger basically. SAP, if we look at it here, now, had you bought it in 2009, it's basically a 3-bagger, but what we can see here is that its return on invested capital back in 2009, it was also high. So you would have invested in it, you would have gotten a 3-bagger basically instead of a 10-bagger. But my point is, a lot of these publicly traded companies that are on here, if they also deliver high returns on invested capital, they tend to do extremely well. And so my point is that this is a place it seems to look for those really great investment opportunities because the employees are happy. When the employees are happy, they do the work well. When they do the work well, the company tends to succeed more. It's just a common sense formula. And if the company also has the ability to deliver high returns on capital and is profitable, those are pretty good clues, I think, that this could possibly be an outstanding investment opportunity. It's very rare that you have a list of companies where if you look at the publicly traded ones, like almost 70% of them are 10-baggers, provided that the return on invested capital was consistently high. And if we look, we can look at subsequent years, and it's not just 2009 that shows this, right? We can continue going down the list, and we continue to find basically 10-baggers all throughout here. Again, provided that the return on invested capital is high, that basically indicates two things to us. Apple is on here. It basically indicates that the employees are satisfied and that the company knows how to allocate capital. Those two things alone are pretty important, I would say. Probably some of the most important things that you can look for. So if we look at the current list, right, let's look at the 2023 list. Among these, let's say, top 10, top 20 companies, we should basically be able to find, I think, a handful of them whose return on invested capital is high, and I think that should then be an indication that the company is probably worth investigating further. So my point is, it's not necessarily a rigid formula where you look at companies who have high employee satisfaction and high returns on invested capital and choose to invest in them, although some people may take it that way. That's not what I'm intending to say. What I'm intending to say is that if you can find companies where the employees are satisfied, let's say the top 20 on that list, okay, and you also find that they deliver high returns on invested capital, that now narrows down your universe quite substantially and increases your probability of finding a 10-bagger, it seems, very high, to a very high level. So you can use that as a sort of very quick way to find possibly great investment opportunities, looking at companies where the employees are very satisfied and they're able to also deliver high returns on invested capital. So it's a quick little tip that you can try and implement for your own portfolios when trying to find great investment opportunities. I think Glassdoor is a great resource. Finding companies where the employees are very, very satisfied, and also where the employees say that there's great future opportunity and prospects in the company is also something that's very important. So keep that in mind. Thank you. If you enjoyed the video, be sure to like it down below. Thanks.